So welcome to Game Plan Sunday. Today is September 27, and we'll take a look at the market here, right here at our website, Wallstreet.Jackboyz.com. If you haven't subscribed, make sure you do so. I'm just going to take a look here at the news feed here, see what we had in the pipeline, what occurred over the past week. So the week started off with news on these financial banks, $2 trillion scandal, basically. Naming some of the top banks like JP Morgan, Deutsche Bank. You know, this was a report that came out, and you guys see US $2 trillion for individual and organizations tied to potential money laundering and other financial crimes. Now, notice how it didn't say that it was fraud. I mean, it said it's potential. So, I mean, you know, I think there's still more to go to on this particular situation. But this is news. The market is down, you know, opening up this week. Markets is pretty choppy overall, but this is one of the reasons, you know, why we saw that. Along with, you know, Nikola. I don't know if we posted that story here. Now, here we go. Yeah, the story on Nikola. You know, this company here, excuse me, the guy Trevor Milton, he used to be all over Twitter, like Elon Musk, you know, this electric car stuff. But, you know, if you guys follow this, I don't know if y'all follow this or not, but it was really interesting because the trucks and everything look pretty cool. They just signed this deal with GM about 2 weeks ago. And it was big news, you know, the stock just started off and everything. But when I dived into the information, what was interesting to me is that these guys been in Wall Street raising all kind of money for this company and don't even have a working car. That's crazy to me. I don't think that's crazy. I think it's crazy. And you can raise billions of dollars, you know, and don't even have a working car, just all on hype. You know, hype that the car is going to be dope or what have you, because they look good. The trucks and everything look good, but they don't have a working model. And you see these semi trucks right here they look really fire. You know what I mean? But none of them work. And so it looks like somebody dropped a report on them. Hindenburg Research dropped a report on them. They had a video that showed the trucks looked like it was driving. It looked like it was driving uphill, but really the trucks were rolling down the hill. And so, you know, Trevor Milton, he's coming out saying how, you know, the trucks were in motion, right? So here we go on the technicalities, right? Truck is in motion. The viewer sees it and thinks that it's driving, right? Which is, you know, sensible for you to think that it's driving if you see it, you know, look like it's moving pretty fast. But anyway, it just came out. It's a whole bunch of stuff with it that's looking like fraud. The founder, CEO Trevor Milton himself stepped down. And they're further investigating this. You know, I don't know if he's going to get any jail time or not, but he did get, you know, I think a couple of billions of dollars of shares. He get to walk away with that. So it's going to be interesting to see how this company works out. And I don't know if GM is going to be on the hook, you know, for anything with this, you know, since they just signed that deal with them. But that's going to be interesting to look at, you know, coming down the road. So, yeah, so that was news that, you know, all of this hit at the same day. So the beginning of the week started off on a down note. Overall, we had a pretty choppy week. Here go Ron right here. He posted, you know, his ideas on these stocks in here. Make sure you guys check out the news feed. Shout out to Ron. He's very active in the group. So here go, what's this? Elon Musk. They had the battery day. So battery day was highly watched and everything. Didn't produce anything good, you know. Let me see. I think that it was, if I can recall here, with Elon Musk, you know, about this whole battery stuff, is that he's still promising about, you know, trying to get a $25,000 car built. And he's been on his promise for a couple of years, and it hasn't nothing came into fruition. So, you know, me, you know, I'm just throwing a little punches at him saying, hey, he's an over-promiser. He's an under-deliverer. So hype, people, so hype. But, you know, he's a smart dude. You know, don't get me wrong. Smart dude, has great ideas. I think he's, you know, spread out too many places, though. You know, he's, you know, launching, you know, silos out into space, not quite space, but in the air, and testing all kind of stuff with that. And he got all kind of, you know, stuff going on. But I think that, you know, we'll see. You know, it was just Tesla make a lot of big promises, and they normally don't adhere to them. They finally went, you know, positive for the first time this year. So you guys got to remember that. But Elon is a great salesman. People love his, you know, charisma, smart dude. He's not a great speaker, though. Like, he really needed to take some speech classes. The guy sounds like he's computing, you know, data bytes, He's stuttering a lot, like, and he's like, dude, you need to have somebody to speak for you or have some kind of speech prepared for you, because he be rambling a lot. He's really not a good presenter. But I think that's part of his appeal, because he's so smart that he wants to appear to be like he's some kind of robot computing. I don't know. But I think people are more in love with Elon, and they haven't looked at the financials on his companies. So I think a lot of the hype we've seen in Tesla is really, based off of the founder himself. People are bullish on Elon Musk. They had not even looking at the fundamentals. So anyway, just want to speak on that. Here we go. This is the Tesla, the battery day right here. Posted it in the group. This is interesting. I don't know if you guys saw the testimony. These things are pretty boring, so I'm pretty sure you guys didn't. But it's right here on the website in case you want to watch it. Fed Powell and Secretary Treasury Steve Mnuchin, talking about, trying to get the economy back right. And basically they're begging for, they're ready to deliver, but they need for Congress to deliver fiscal stimulus, because, the Fed power don't really work right now, but they need for Congress to do what they got to do to get these programs up. The Fed is going to fund the operations. So that's pretty much what that was. Now, speaking on that, what's interesting here is, excuse me, guys, what's interesting is that we still don't have this stimulus package. It still hasn't came out yet. So the stimulus package hasn't came out yet. And I think that it's worrying the markets because, as I was saying before, is that, Wall Street got pumped up with all the stimulus. We saw the stock market going up when they started, pumping stimulus. But now we're at a standstill. What's interesting about this is because in this election year. And so you have, the Democrats, and you got Trump. Trump just, announced his new Supreme Court pick and everything. It's a lot of tension around that. But so you have a situation where we may not get another stimulus before the election. And I was listening to economist Wall Street economist, he was talking about how that he doesn't think that we even need another stimulus. And I thought that was an interesting perspective. What's his name? Ed Yardeni, Wall Street economist. He was saying how we probably don't even need a stimulus because the stimulus that they put out was so big and so massive. It's still playing out in the economy right now. Still got some wiggle room is what he's saying. I'm not too sure, and I don't really think that's the case, to be honest with you. These economists, these guys, they're constantly trying to figure out why things are the way they are. So I think it's a speculation, and it may be an oversight. I'm not too sure or not, but that's interesting because, they're constantly in here trying to get this stimulus passed. So we saw that happen. Halloween could be canceled this year. I don't celebrate Halloween, but for those who do, I'm sure you're probably looking forward to the festivities. But it's looking like it's not going to be a possibility because of the COVID situation. Speaking of the COVID situation, you see here the U.S. has passed 200,000 reported deaths from COVID-19. So another thing is we saw COVID cases picking back up with the data coming from the CDC. COVID cases picking back up, which is not a good sign. You got flu season coming in right now. And I'm seeing that, basically projecting a mixture of, the effects of, when people get the flu and COVID and how those cases, get inflated and call, COVID, what have you. But we're seeing an uptick in that, and that's not positive on the markets either. Okay. It's Justin posted on the group. Check that out. And Justin's also doing some Forex work for you guys too. So make sure you check out the Forex group, which is right here. If you can see that, if we can switch to red. If you guys are into that, there's a group for it. Okay. We had the unemployment numbers came out, over 870,000 people filed for unemployment last week. And the previous week numbers were also revised up by $6,000 up to 6,000 people, bringing the number up to 866. So, this is what the chart looks like for those wondering. We're still bumping up against this average here, but it's not that it's a negative sign, but it look like if it goes this way, it's definitely really bad, really, really bad. They don't want that to happen. So they're trying to keep this thing at least choppy or downward. Hopefully downward is what they're trying to get to. We're not seeing that, right? So the stimulus that they're putting out is supposed to get these companies money so they can hire people back. And it looks like we had basically, because again, we got the ADP numbers that's coming out this week also. And basically, we lost about 20 million jobs back in March. We've only recovered over 8.5 million jobs back. And so it's still a lot of, jobs that you're trying to get back. Those jobs ain't coming back. And everybody was expecting the V-shaped recovery or Y-shape, any kind of letter you could think of, and it's just not happening. And so that's another reason why there's this big emphasis on them passing stimulus, because they're trying to get these jobs boosted. They feel like if they can get these companies this money, then they'll hire people. And that's just not happening. We're seeing lots of people being laid off again, over, almost 1 million people a week still. And these are astronomical numbers here. So, all of that had the markets hampered down over the past week. Ended on a positive note, but it's still choppy, in which that's what we went into last week, knowing that the markets was going to be a little choppy. And so that's what that was. Check this out. Financial model that I'm building on Walmart. Hard work. You guys, I don't know if you saw that or not. But this is what I've been working on all week. And it's been, busting my balls here. No sleep, lots of research. Let me actually expose it to you guys real quick so you can see what does financial model look like. All right. So there's a lot of work that goes into this. Let's see if we can make it a little bigger. All right. So as you guys can see, this is my little homepage here. This is the dashboard right here. Lots of great information and insight, my price targets on Walmart and stuff like that. Let me point this out here. We got scenario analysis built into this as well, so I can go to different cases. You see price targets and things like that. Okay. Lots of great detailed information. Stock chart right here. Everything is manually made. Forecasting. I got 11 years forecasting out here. And so this is pretty interesting stuff. As you guys can see, take a lot of work, digging through those SEC reports, building it all out right here. As you guys can see, lots of information, whole lot of information. I know you're seeing a lot of numbers like, what in the hell? Yeah, this is what I've been busting my balls here on. And I'm just exposing it to you guys so you guys see what, kind of work I've been into and what I've been doing here, building these financial models. Yeah. So anyway, that's this is what I've been building on. So if you guys want to take a look at that, let me know. And I got some more that I'm gonna be building also. So it takes a lot of work though, man. Really a lot of work building these financial models. Anyway, you guys know I got my financial modeling designation. So all that comes with the training, and it's really hardcore, I must say. So anyway, I just want to post that here on the website. Also, we had the Boston Fed, Eric Rosengren, right? He was saying he's pessimistic on the labor market. And so this is a video. If you go to the website on the news feed, go watch this yourself, okay? But you got a Fed boss, Fed president who's saying that, the jobs ain't coming back, B. So anyhow, I thought it was interesting because, we got one of these guys that's pretty much speaking our language here. So that's interesting. Also, we had Ray Dalio came out with another installment. Let me expose you guys to that as well. We covered it in depth last week on Ray Dalio. And, it's interesting. A lot of people are not familiar with his work, not at all. You guys in here, we've been covering a lot of his work for, the past year. He has lots of books. I know a lot of people just like to post headlines, but they actually have no idea what the hell is going on, what he's talking about. This is a huge body of work that he's working on right now. That's an extension of his previous body of work, which is the big debt crisis. So if you haven't even gotten to that, you're probably going to be lost along the lines when it comes to dealing with this type of information that he's dropping. So, and he's dropping it on LinkedIn. It's free, you guys. It's a book that's coming out in November. He's working on it. He's releasing chapter by chapter from all of his research. Ray Dalio, he's not God or anything like that, but I definitely pay attention to his research. He's a multi-billionaire, got more money and more time than I do to actually research these things. So he has lots of insight, lots of wisdom that you can gather. And, you just basically have to, use that information to make your decisions. So good information. Again, this is about the China situation, U.S.-China relations and wars. Ray Dalio's talking about wars. In fact, I haven't even gotten through the whole thing myself, but if you guys can check this out, if you read the bold parts, right, you can get through it a little quicker. Okay. Those are the highlights, right? And then the small text, the basic text is basically if you want to get more into the details. Now, he's talking about the trade wars, economic. He's talking about a whole bunch of different type of wars, but basically we're in war with China right now. And he's talking about both sides, right? He's trying to take a non-biased perspective, basically. And he's describing these things, his forecasts of what he believes is going to happen, because he's seen, over 500 years of data that show how these, cycles pretty much turn out to. So this is pretty much what you're looking at. But he also gets into the currencies as well. So definitely you guys make sure you check this out. I'll drop a link in here for you on this as well. But I'll take a look at a couple of quick points that he was talking about in here. Okay. He said, classically, the most dangerous part of a trade economic war comes when countries cut the other off from essential imports. And this is interesting because Ron posted just this right here today, and it's about U.S. government sanctions Chinese chip makers. All right. Shout out to Ron for that. But it ties into our lesson here. So you guys it's plenty of homework to do. You feel me? Plenty of homework to do. Even when you're not trading, still need to be learning. Okay. I do a lot of the work too, but again, I don't know everything, right? This is team community. We build it together, but you guys already know what I'm doing. So anyway, he's talking about, companies, countries cutting each other off. And if you go back to his Big Debt Crisis book, you can see in that body of work, he was describing the whole Pearl Harbor situation. For you guys that don't know the whole bombing of Pearl Harbor, how that came to be, the U.S. cut Japan off from, goods that they needed, slapped sanctions and tariffs on them, really messed up their economy. And they were, basically on the brink of starvation and everything. So they launched the whole situation there. Let's see, much like here you go, right here. He's talking about it here. In fact, much like the U.S. cutting off oil to Japan was a short leading indicator of the military war that followed, right? So he's saying that, hey, when these things happen, normally a war pops off, right? That's all he's saying right here. And then he's talking about how the China's economy and the American economy will be decoupling from each other. And that will actually be more detrimental on America than it would be for China. Why is that the case? Most of the things that's in our household, anything you can pick up is more than likely made in China. This is my little calculator I got right here, right? It's funny because I got this calculator, and the thing that was funny about it is that Ray Dalio was saying how 36 years ago when he went to China, when he showed them in China the calculator, they were so amazed and blown away. It was crazy. Like they never seen anything like that. And in such short time, they have transformed everything. You remember last week we talked about, China switching over from socialism to taking on capitalism. And so their economy is actually more free than our economy. When you actually take a look at all the rules and regulations that we have, it's slowing America down. China don't have all of that. So they are booming. They are the they are, the miracle of the day as their growth, because they figured out that capitalism was the solution, but they don't want a democracy because they believe democracy slows things down. And in fact, that's what it's doing. You got the left, you got the right, the Democrats, Republicans, all of that, animosity. When you got communist rule, it is what big dog say it is, and that's what it is. So the big dog Deng Xiaoping, before Xi Jinping came in, he told everybody in the country to get rich. That's what the goal was. Whatever you got to do to get rich. Anyway, so that plays out into what he was saying here is that, I don't know if it's here. Let me see. Reducing one's dependency. Okay, obviously the rate of reducing one's dependency that can be cut off will be much greater for China over the next 5 to 10 years than for the United States. So understand, when people spend money, they're buying goods. This is growing the economy for people spending. But you need goods to consume. So what's happening is this. Trump has the whole Make America Great Again campaign, and, that's to try to get jobs to come back to America, right? But China is basically the number one producer that produces most of the goods that we consume. And so what Ray Dalio is describing in this text, because I'm trying to skim through it here, it's very lengthy. You guys got to understand. But basically what he's describing is this, is that America is more dependent on China's economy than China is on American economy. And that is dangerous, that we move into nationalist perspectives. You know, Donald Trump's a nationalist. It's like, okay, made in America, buy America, stay in America, right? And so the fear is that if China takes, moves, which China's already moving into those steps with retaliation against America. And so if that happens, you're going to have less consumer goods because China actually could consume those goods themselves. You got over 1 billion people in China. They can consume all the things that they make. America, we don't produce anything. It's all produced in China. We got to, basically get back to producing. But the miscalculation here is that in order for Americans to produce things and sell it back to Americans, it's going to come at a higher cost. It's going to be inflationary. And so that, again, is, that's why, social cooperation is good. They figured this out in economics with the Ricardian law of association that, China's doing better at production. It's cheaper overall, but, for the whole society to get it made like that. But a lot of jobs have been gone. Americans have been really messed up from the jobs, switching over. But also what he plays into on this thing is that China has been buying up a lot of American debt. Just like how we're doing right now, we're trying to, monetize the economy. We're doing a lot of quantitative easing. All this stuff has to be financed. Nothing is free. Welfare is not free. People want reparations. None of that is free. So the government has to find ways to get that money. It's either raise taxes or issue debt. When they issue debt, that's bonds. The biggest bond buyer, China. And so basically, this is one hell of a chess game because he's basically saying that China has been fueling this whole thing. They've been playing their role, sacrificing a couple pawns here and there to get you in checkmate. That's pretty much what's been happening. Because, okay, yeah, we'll buy all your bonds, right? We'll buy all that, right? America get the money in return. But America has so much debt and America doesn't produce enough to service these debts. It is not good for the American dollar, for the US dollar, which he goes further than that as well. But let me touch on this real quick. I told you I ain't gonna keep y'all too long. All right, so the technology war is one thing he talked about as well. This is very, very important, okay? Because with technology is key for everything moving forward in society, whether it's military, whether it's medical, whatever it is, you need technology. And so what he's basically saying is how the Chinese, they are so big into tech. They are outpacing America. He's talking about the kids in the STEM program that's graduating right now. It's 8 times more. Chinese people have 8 times more people that's graduating in these STEM programs than Americans are. What Americans doing, right? Remember in school, people told you just do what you want to do what you love doing and all this stuff. And you get a whole bunch of people in a bunch of debt going to school for art. You don't need to go to school for art programs. You don't need to go to school for entertainment. You don't need to go to school for all of that. You're just wasting resources. And then you end up with no jobs. That's what's been happening. We've been living in euphoria that's been financed by China, and people don't understand. And so China, these Chinese people, you talk about them. I don't know if you saw the movie Big Short. Y'all saw Big Short? When the guy walked in with the Chinese kid and they was asking him, like, when he was talking about the crash is coming, and it was like, are your numbers right? He was like, look at my man right here. Look at him. He don't even speak English. He was a Chinese guy who actually spoke English, but it made good for the meeting that he had. Because it's like, you're not going to question a Chinese guy about numbers because the perception is that they're all good with the numbers. What Ray Dalio was helping us to understand is that it's not necessarily that they're even just like, it's not that they're geniuses. It's like really kind of vital for their economy. It's the society that they're in, the one child rule they have. The parents put a lot of pressure on those kids, on the Chinese, kids to, basically come to America, get that education. We got the best educational systems and everything. But these people are getting the education and they're going back to China because, starting a business back in China, you can get up and run and you can make all the money you can. So anyway, Ray Dalio goes into all of that. And he's basically, again, this is really lengthy stuff. I know you guys are probably not going to read it. So that's why I'm just going through it for you. He's talking about the currencies also. They was asking about, there's no better currency than the US dollar. So what else we're going to go through? You can see, you got a little chart here. US dollars, the euro, gold, the yen, the British pound. You can see all these different currencies. He's going through, I think there's a part in here Okay, he was talking about how weak the dollar is going to be. The euro's weak. The yen, nobody's really using the yen. The British pound is barbaric. Gold, check this out. He said gold is held because it has worked the best for the longest time, and like the British pound, because it was held from a past time, i.e., before 1971, when gold was at the foundation of the world's currency system. It has appeal because it doesn't have this it doesn't have the previously described weaknesses of the fiat currencies being overprinted. At the same time, the size is limited because the gold market is limited in size. So you can't print it into infinity. So it's going to keep its value, basically. This is interesting. Then goes further. He said the Chinese renminbi is the only currency to be chosen as a reserve currency because of its fundamentals. What's he talking about? China has the largest share of world trade. Its economy is roughly tied for the biggest. It has managed its currency to be relatively stable against other currencies and goods and services prices, and its reserves and its other strengths are large. Also, it doesn't have the 0% interest rate, negative real interest rate, and the printing and monetization of debt problem, though it does have a lot of domestic debt that has to be restructured. Its drawbacks are that it is not widely used. It doesn't allow the free flowing of capital and a free floating exchange rate. Its capital markets and its financial center have to be better developed. Its clearing system is undeveloped, and it has yet to build world investors' trust. So this is a strong foundation he's putting on the Chinese renminbi, but they have room to grow because that's what the goal is. The goal is to take the status from the U.S. Reserve currency. They want the world reserve currency. That's basically what it is because you need that power. So anyway, this stuff is really, really good stuff in here. He's talking about the economy. Then he's going into military war. Okay, he's going to military wars. He's talking about how these countries are playing chicken, basically. He's talking about the special interests down in South China Seas, Taiwan in particular, where China is not, happy with the U.S. and the U.S. Meddling to the business on their borders. And Taiwan, what he's basically kind of saying is we may be pressed by China to release Taiwan, basically. And it's one of those things that, he's just identifying risks that could potentially happen. So Taiwan is a very special place of interest. He goes into culture and all these other things. Let's see. What did he end on here? Our greatest war is with ourselves because we have the most control over how strong or weak we are, because it is pretty clear what makes countries strong and weak, and because these strengths and weaknesses are measurable, it is easy to see how each country is doing. These factors were laid out in the first chapter and measured by 17 indices. I will briefly review them here. Then in the concluding chapter, the future, I will show these indices for most countries and will explore the leading indicators of them so that we can make projections for the future. Okay, so he covers some of this stuff in his previous books, the 17 indices that he uses to calculate where countries are and where they're headed to, so you can make forecasts and things like that. So this is, again, if you know about his previous work, you can get into this, right? Anyway, so that was it, right? So that was pretty interesting. Again, you guys check that out. I'll drop a link in there for you guys. You can check it out or what have you. It is on the website as well. So there we have it. Now, speaking of those things, I do want to touch on gold here real quick. And I'll drop that link in there for you guys. All right. So let's take a look at the markets. This is where we are. The Nasdaq. Let me switch over to yellow. So we're going to start off with equities real quick. All right. Give me that. All right. Here we go. Right here at the 100 moving average, right? So that was the 50 moving average. The key is to see will we actually break underneath that. We did, but we held above the 100. So what we're doing right now, we're chopping. Markets is chopping around, right? I don't think that we will see another high. Definitely not before the election. What we're seeing is this bounce up, right? Came up to the 21, rejected, come down, rejected at the 50, chopping around, right? So the question is, can we come back up to about the 618? That'll be about it if we do. I don't think we'll clear that. But it's going to be more choppiness, right? This is very volatile. It's we're at the end of the month, right? We're going into October. You got basically a month before the election. So right now is a very treacherous time. You got to ratchet up. This is not the same game that you played from here. All right. This is not the same game that you played from here to here. All right. This right here was smooth sailings, right? But what we're going to right here is risky, right? The unknowns, there's too many unknowns, too much at risk right now. It is crazy, okay? So as I was mentioning on the last time, you're looking at more day trade type of situations. 1 or 2 days in a trade, man, okay? Because you mess around and get your head bit off. It's very treacherous. But this is the Nasdaq. So you just look at the tech stocks. We're basically looking for the floor to hold here. This is what I'm looking for, the floor to hold right here at the 127 of the 100 moving average. You see the momentum is shifting upwards. So I think that we can come upwards some, okay? And I think that we'll get rejected if we make it back up to the 618. Don't quite know, but we got some momentum that's shifting upwards, right? But the key is we're trying to find, I think the key is to find stocks that's moving opposite of the overall market. So that's what we're doing every day in the chat room on the website. So make sure you're in the chat room looking for those stocks that's popping, moving, you know, in certain patterns and things like that, that's moving opposite of the markets. So that's the Nasdaq. Let's take a look at the S&P. You're looking at a similar situation here in the S&P, pretty much the same thing. Markets came down, sat right here on the 100, breached that 50, because that 50, that was key. All right, confidence shaking out, but confidence coming back in because we're holding up to the 100, okay? This is a steep decline, all right? So the key is to see if we can come back up, right? If we can come back up, I think, you know, that's a possibility that we can come back up before we take a further, you know, drop down. However, I mean, we could come straight all the way down here. Now, we're really close to this level. This is going to be a strong floor level right here at the 1618. And it's going to be critical that we hold that. What I do want to highlight is that, remember, our highs before the market crash was here. We've already breached that, right? We're under those levels again, okay? So you're supposed to make all your money right here. But if you think about it, right, check this out. If you're the person that's holding your money, right? And I'm just a holder, holding my money, and you lost all this value, right? Okay. But then you started getting confident when you started seeing the Feds maneuvering and it's coming back up. You're like, oh, I'm back. I'm breaking back even. And then you came up and then you finally made a profit. You finally made profit. And then as soon as you did that, you lost it all, right? So, I mean, again, treacherous markets. But that's the S&P 500. Let's take a look at the Russell. All right. So these are more domestic stocks here, right? And they're holding up pretty sideways. No big moves up, but then no sharp declines downward, right? So this is interesting. It is at the 200 moving average, all right? And it's trapped in between the 200 and the 100. It's going to be important to see if this thing clears. Now, what I've noticed in the past is that normally the Russell leads, okay? Normally the Russell leads. If the Russell go down, you see the other ones go down afterwards. So now we do have some signals that's showing that it's trying to reverse, but the trend is, you know, again, it's choppy to downward. The key is to see if this thing can break through this chop zone right here and come back up on another rally, or do we break beneath this? If we break beneath this, then the rest of the markets would more than likely follow. Okay, they will be lagging. The Russell will break first. Let's take a look at the gold market. Gold was down. All right, gold was down. Silver was down. All right, big drop. Okay, I even got shook up out of my position, right? But it's holding right here at the 100 moving average, just like equities. We've been seeing gold has been moving like equities. But what was interesting is gold actually started to move much faster than equities, bleeding because the dollar was actually going up. You got stopped out to Dustin. Yeah. Hey, I was holding on in there. But I did identify that, you know, we was looking like we was, you know, this level that we could break this level because we tested it before and we did not clear it before. So that did make it interesting. We didn't even get up that high, right? And there's a strong breakdown here. Now, the reason why we're having the break in gold, because a lot of people ask, well, why are we having the break in gold? The risk is increasing. Why is gold going down, right? So this is what you have. Remember, gold is inflationary, right? If the Feds print money, more money, right? This makes investors go into gold. So more stimulus, right? More stimulus. Whenever the Feds or the government starts to increase in those things, the fiscal policy, monetary policy, gold benefits from that because they need, investors are looking to hedge their cash positions. But remember, we did not get the stimulus yet. No stimulus. Okay. So because of no stimulus yet, okay. And remember, we had, everybody squeezing up into the zone. Even myself, we're squeezing into the zone because we were expecting to have stimulus by September 27, but we still don't have that. So you get people that's antsy and say, F it, I'm out, right? Because they have not passed that stimulus. Now, when they pass the stimulus, you see gold goes up, right? But because there's no inflationary pressures, right? And gold is protection from inflation, you're looking at a stagflation or deflation. And so that is when we were talking about this months ago, what could break this? And people were asking, okay, should I sell my gold yet? Should I sell my silver yet? Well, under what circumstances will I sell, right? So if things are deflationary, then, that is going to be bad for gold, right? But if things are going to be inflationary, and remember, the only thing that government is going to do, they're going to print the money. It's just a matter of time, right? They're going to do the stimulus, whether it's Trump or whether it's Biden. Either way, they're going to do it because what's happening is there's stops in place in the economy that's preventing the pain from being realized. The pains haven't been realized yet, right? You have real estate market, which even my mother was asking me about. Hey, man, I'm seeing a lot of houses going up. In fact, we had real estate numbers that came out last week. New homes built. We're seeing a boom in houses built. In fact, I think the data came out that we are seeing more houses being built than back before the 2008 recession, right? Which is interesting because you got almost a million people a week filing for unemployment. So who's buying up all these houses, right? Where are they getting it from? So you're seeing, a lot of mixed signals, but most people are not really able to really identify them, right? You have, over 30 million people haven't paid rent and mortgage, right? But they passed executive laws that, the landlords can't kick people out, right? And so you can't kick people out and you're not collecting any money. Or a lot of these guys who's, financing these real estate deals, they're not buying these houses cash. They're financing just like you financing, but they need your money to pay their bills. If they can't get the money from you, they're gonna have to foreclose on their house. So it's like this domino effect that actually happens. But because of the government intervention, Trump has this order for that until I think January or February of next year. So you're not seeing the pain. However, the old balances, they haven't gone anyway. Those balances are just accumulating. They're compounding up, right? And so by the time January comes, you got this big ass balance that you thought you was getting away with. There are no freebies, all right? There's no free lunch. So when people got to pay this thing and this whole eviction notice comes off, I think it's going to be mayhem, right? It's going to be, and we'll have to see how that plays out. But I think it's going to be mayhem. So we'll see how that plays out. But just remember, that's what's happening. That's why you see this whole sell-off here is because of the lack of stimulus. All right. Also, same thing in silver as well, which had a big fall as well. And we talked about this last week when I was like, oh, this looking like a head and shoulders pattern. And here we go. Right. All right. Boom, boom, boom. Right. Then you get that drop, but it is holding to the 100. All right. So you guys got to understand, we were back in at these times. So it doesn't matter, even if it come down here, right? Still holding. All right. Now we break. I'm out. I'm just going to cash out. But I believe that we'll hold this, all right? Unless, again, what I was just describing to you guys about deflation. But every trick that they're going to pull out is going to more than likely, and a high probability, inflationary, print money, fiscal stimulus, you know. Once they start seeing the pain, they put more pressure on Congress to pass these bills, but they're not trying to pass it right now because of politics, right? Got an election coming up. In fact, on Tuesday, we got the debate with Trump and Biden. So the first of 3 debates, I'm sure you guys are going to be tuned in, chiming, you know, on that. That's going to be pretty entertaining. We also have the Consumer Confidence Index that's going to be reporting on Tuesday as well. And then we have the IHS market numbers that's going to be reporting Tuesday. So Tuesday is going to be pretty good. Wednesday, we're going to have the ADP numbers. Okay, so the ADP numbers, what they're expecting is 625,000 private sector jobs created, which is 428,000 back in August. So they're expecting 625,000 this time around. Okay, so that's what the expectations. We'll learn that on Wednesday from ADP. And always know that when they report the ADP numbers, they always report those before the BEA numbers, right? The Bureau of Labor Statistic job report, which is Friday. Also, we have what else do we have? The Chicago PMI numbers on Wednesday as well. Thursday, we got the BEA numbers. And then Friday, we get the Bureau of Labor Statistics jobs reports. They're expecting an increase of 932,000 jobs created. What else? Yeah, that's pretty much it. Okay. All right. So with that being said, again, when you guys are on the website, all right, just so you know, when you're on the website, if you're like on the homepage, okay, just remember you're not going to be able to access the chat room from the homepage. You must navigate to any other page. You can go through your dashboard. You can go to the courses. You can go to profile, timeline. I like to go to the news feed because that's where I'm posting that most of the day. Also looking at things that you guys may post as well. I like to catch that in the news feed, just like how you see on Facebook and Twitter, right? So if you come on here on the news feed, right, you get the latest news. You get the events calendar, what's coming up, right? See some of those economic indicators that we were just describing here, right? You can see those things, you know, listed right here, right? So you get a glimpse of what's coming up ahead. You got to stay ahead of the markets, remember, right? But the chat room, the chat bubble is right here. So just remember, once you get in, you can get into the chat bubble, and we'll be covering things in real time right here in the chat room. And so you guys can see all of that in the chat room, right? And this let me see. So you guys see this here, this watch list that I got right here, the scanner that we have. If you guys want it and you don't have your hands on it, you know, let me know. We'll get that over to you. But the scanner is pretty cool. Every day is dropping in the feed, good names to trade that have triggered an entry point, right? And so you take a look, just look at the top names in there, right? Like NVIDIA, you know, all you got to do is go in once it pops on the scanner. You take a look at it, you let the computer do the work, right? So the computer's doing all the work, and you know what you see is a good pattern, right? You see it bounce, holding up on that floor. We got some momentum that's shifting upwards, right? We got some buy triggers in here. And so you can see a rise up to the 618, okay? Again, you can just go straight down the line here. I haven't even checked them, but look at that pattern, right? The trend is intact. It is bullish, right? It's holding up above its moving averages. It's creeping up above that 618 resistance right up in here, right? We got the trend that's following up, momentum shifting up, all of that shifting up. So we could definitely at least get to the 786, okay, which is $487. But we do have a target right up here at the 520. All right. So I'll take a couple from you guys here real quick. Again, if you don't have your hands on the scanner, let me know. We'll get the scanner over to you right on the website. Anything you guys want to take a look at before we bring this to a close? And have you guys found the information that I shared with you guys on Ray Dalio's work. Let me know how you guys feel about that information. It's real heavy, real heavy. A lot of information to cover. And I know many people don't quite understand it. All right. In-phase energy. All right. So again, just taking a look at the chart. This is a bullish pattern that we're looking at. We'll take from that swing high to the swing low. We got a buy trigger right here. Bingo, the buy trigger with a target right up here at about 85 bucks. Trend is moving higher. We got a squeeze in there. Momentum is shifting up, right? Now, it may chop up a little bit, though. It may chop up a little bit, but overall, it should rise a little higher. So I'm bullish on that. Not too sure what's this, an energy company? Okay. I am liking the solar stocks for you guys. I don't know if you've been following the solar stocks. I am liking the solar stocks, which are looking pretty good. Upwork, same thing. This stock is looking a little volatile, though. And I'm not too sure the liquidity on this stock. What's the liquidity looking like on here? But just looking at the pattern for what it is, this right here was a little head, a little shoulder, inverse head and shoulders, right? Bingo. And you got the 1272 extension right here as a target. So just taking a look at the pattern itself. And let's say Apple. Okay, yeah. You know, I think Mark was even asking about Apple here as well this week. So I just took this, again, took this point here, this low, right? Reference to this high with the Fibonacci. You got the 127 and hit right here. Look how the candlestick hits the 127 extension perfectly and bounces, right? It hits off, bounces up into the 9, chopping around. All right, so it's smart to move up a little more higher. I'm seeing more choppiness on this thing here. So I believe they're still going to chop some more. It is, you know, again, in that oversold territory, which is pretty good. Okay. But until we get a break up above this area, right? If we get a break up above this area, then we can see higher projections. But, you know, bull case scenario, 121.24 cents at the 618 retracement before you get another, you know, drop down, right? And I think all of this would be, you know, before election, right? All right, cool. You want 100 for Apple? Exactly. Yeah, I remember buying Apple at $91 a share way back in the day. So with that split, you know, that was a huge split. That would have been what, 40-something dollars? Excuse me, 20-something dollars after this, because it split what, 4 ways? I can't remember, but yeah. So anyway, Apple is still it's up here, still high, but $100 I think is a good target, you know, which is this, you know, moving average right here. If we can get to that point, a lot of people would like to get Apple at that point. And I think you'll see a lot of buying going to Apple if we can get to these prices here. So yeah, definitely, if this thing can come down some more, $100 is a great price for Apple. But yeah, all right, cool. With that being said, you guys got anything else? Any other concerns? Dustin, my man, good to see you. John, good to see you. Mark, what is happening? We got to get on the line. Got a lot to cover with you. Ron, Serge, Sid, you guys are awesome. You guys are great. I appreciate you guys showing up. I am super tired, and I am going to go get me some rest, I think, unless I get back on this computer and start building these reports. But yeah, tell me how you guys feel about, you know, the narration on the Ray Dalio paperwork. Also, you know, even if you want a copy of my financial model that I built, you know, just let me know, you know, here for you guys, you know, and you can see the work that I put in, you know, lots of work. And this is on Walmart in particular. So again, lots of key information in there, great information on this financial model that I built. But yeah. All right, cool. You looking at Walmart? Yeah, Walmart is looking good. So we got Target here. In fact, this is my my bull case. This is a consensus case scenario. Got a bull case scenario. Let's see if this thing will load up here. And so we have a bull case scenario. Price target around 185, and then I got a bear case scenario. Let's switch it over. It's about $95. You know, bear case scenario. So worst case scenario. Those are my ranges on Walmart that I like right now. consensus case still running here at about 152, somewhere around 152 range, according to my model here. Again, I'm still tweaking it, you know, trying to perfect it. Hard work, but I'm pretty proud of what I'm doing here. So, but yeah, I appreciate you guys, man. Hey, I'll chop this video up. We'll get it out here by tomorrow, of course. If you're not getting the emails, make sure you let us know so I can get you guys, you know, on the list. If you're not, make sure you guys can get that. Make sure you check in on the website daily as well. Just check in, you know, daily, see what we got cooking. All right. So I appreciate you guys, man. Y'all have an awesome weekend, and we'll catch up in the markets tomorrow. Peace.